Good morning, everyone. This is T3 Live Editor-in-Chief John Darsie.
And I'm Brittany Umar, and together we bring you Morning Call Express. So our futures are pointing to a sharply lower open this morning as the debt ceiling deadline of this Thursday, October 17th, draws closer. So, John, what is the likelihood, in your opinion, that we actually will default?
I mean, did we really expect this group in Washington to come to an agreement, days before the actual deadline? That's not how they roll. That's not what they've proven that they do. The previous discussions, the fiscal cliff, all that type of stuff has gone right up to the deadline. So last week we got that good news that some Republicans have started to break from the extreme side and come to an agreement. It seemed like in principle to avoid hitting the debt ceiling and raising the debt ceiling, but they continue to haggle on details with some time till that deadline. So I don't think we will default. I think that would be such a disastrous occurrence for everyone on both sides of the aisle that I don't think they risk plunging us into that sort of calamity, but I think it could continue to go up closer to the deadline, and as we do get closer to the deadline, I think there will be anxiety that it could happen, and there are voices out there that think it's a real possibility. I don't, but that doesn't mean that you don't trade based on guesses and based on coin flips. You trade based on the price action. So I think you continue to be very cautious in this type of environment until we do get that actual raise.
Right. Well, that anxiety can lead to a rocky trading environment. So for now, what are the levels to watch in the S&P?
All right, take a look at the chart of the spiders here. As you can see, we had two really impressive days of price action on Thursday and Friday as the market was pleasantly surprised by the fact that we might come to an agreement days before the deadline. But over the weekend, as we mentioned, no deal. Futures are down. S&P futures are down about 10 handles. The first level to watch will be Friday's low, which we're not quite below that yet, which is somewhat encouraging. But we'll have Friday's low. We have the 8 and 21-day moving average curling up right in that area. We have a little cluster of support here, so that'll be the obvious area to watch. The bulls would like to see us hold that level if we're going to maintain bullish composure, but considering also the fact that today is Columbus Day, I know the stock market's obviously open or we wouldn't be standing here, but bond markets are closed, so you could see a little bit lower volume as a result of that. And I think in general, most people think a deal will happen, but the deal hasn't happened yet. As my dad always told me, don't count the chickens before they hatch. But I think we could get some choppy sideways type action until that Thursday deadline, because I think, like I said, expectations are we'll get it done, but it's not done yet, so everybody's sort of in wait-and-see mode.
Well, meanwhile, we're talking so much about the government shutdown and the debt ceiling that we're not talking as much about earnings. But earnings season is really heating up. We'll have the banks continue to be in focus this week after J.P. Morgan and Wells Fargo reported on Friday. Their reports were somewhat of a rocky start to the bank earnings, and we do have Citigroup and Bank of America coming out tomorrow. What are you expecting, John? Yeah,
like you said, this whole debt ceiling thing has drowned out every other issue in the market. We forgot about Syria. That was only a few weeks ago. Nobody even remembers Syria. Now earnings season is coming up, which is typically a big driver for stocks, but with all this macro stuff taking precedence, earnings hasn't really gotten talked about a lot. And like you said on Friday, sort of a mediocre start to bank earnings. But then on Tuesday, we have Bank of America and Citigroup. First, I'll take a look at the chart of Wells Fargo. As you can see, Friday we opened sharply lower, but we're able to rally back to near the flat line, but still not what you'd like to see, especially with these bank stocks not priced for perfection. They're well off their highs, not really expecting great reports, and Wells Fargo even fell short of that. And then J.P. Morgan's was actually sort of the opposite type of situation where everybody was expecting a terrible report. It pretty much got a terrible report, but I guess not as terrible as some people feared. It opened higher, but then closed back down near the flat line. So both of them ended up flat, but had different paths to get there. But then we have Citigroup on Tuesday, which that one was obviously near the flat line, like the other banks on Friday that reported earnings. So sort of bounced a little bit the last couple of days. Maybe people are expecting something decent there, but no real edge in trading that prior to earnings. And then you have Bank of America. Bank of America holding up a little bit better than some of the other banks, back above this sort of pivot low that it broke down below in September. So, like I said, both of them not much of an edge there, but I think it could be a sector that will be in focus after those reports. And then we also have Goldman Sachs reporting on Thursday, so keep an eye on the banks.
All right, and just some quick hits in tech. We do have Apple holding up well last week, continue to find support at the 21-day. Check in on that one for us.
Yeah, Apple's one that, in a weak market, it's held up decently well, and then in a strong market, it's been unable to really break out. So it's just a lot of sideways, choppy type action in Apple. We take a look at the chart. And it's a setup that we've been highlighting in off the charts and on our morning call. This downward trend line that's in place, this sort of wedge pattern that's been forming, and we're looking for a break above it. But like I said, Apple's been a little bit lethargic and choppy. It is above its 8 and 21 day moving average and all of its other moving averages, so it's a setup we still do like pretty well. So I think don't get distracted just because it's not going yet. I think this is one that has shrugged off some of the volatility in the market and could be ready to go at some point, especially if the deal does get done and the market does get a bounce from that.
All right, I know you'll tell us more about it in the full morning call, but we did have SolarCity jumping 23% last week on raising its outlook. I know you'll be watching some solar names this week, right?
Yeah, we'll save the real analysis of the solars for the full call, but yeah, SolarCity jumped 23% on Friday. Take a look at the chart. Huge move there as they raised outlook. Keep an eye on some of the other small cap solar type names that have been strong. We'll talk about it more in the full call, like Brittany said.
All right, so stay with us for the full morning call.